analysts, the media representatives who are here. We also now have some representatives from the Philippine Stock Exchange. Thank you all for coming. If you remember the last briefing we had, it was just after the monsoon surge, so we didn't really give a complete report at that time. Instead, we focused on the CSR operation of SM. So this gives us today a better opportunity to talk about what's been going on in SM now for the last 9 months of 2012. Before that, I'd like to introduce the beautiful ladies and gentlemen of SM here on the table. We have Mr. Harley C., our president. We have a very liquid CFO again after his $500 million issue, Mr. Shaw, our CFO. And recently voted as one of the best CFOs, Mr. Jeffrey Lim. And Senior Vice President for Department Stores, Ms. Chelo Monasterio. And we have the President for SM Hypermarkets, Mr. Robert Cui. And then we also have Ms. Rose Qua, President of SM Development Corporation. We have Ray Villar, Executive Vice President for SM Hotels and Conventions Corporation. Mr. Chito Reyes, SVP for Investor Relations for BDO. Okay, just to go on with the presentation, as you know, these are the core businesses of SM, no? So I'll be discussing their performance in the last 9 months. But first, on a consolidated basis, SM's revenues increased by 13.4 in the first 9 months of 2012 to 157.9 billion. Coming from 139.2 billion 9 months of 2011, and that resulted in net income of 16.1 billion pesos, which was up by 13.9%. The driver there, the growth drivers, were mainly the banks and the malls, no, where you now have the banks contributing 36.1% to our net income, coming from only 16.9% in 2008. The malls contribute 23.3%, the retail with 25.8%, and the property with 14.8%, coming from just 3.8% in 2008. Okay. As far as net margins are concerned, it's quite steady at about 10% for SM Investments. And then for total assets, that increased by 36%. As I mentioned earlier, we did a $500 million straight bond issue priced at 4.25% over a 7-year period. No, it's fixed over 7 years. And in addition to that, we also issued this year a convertible bond worth $250 million. A retail bond worth 15 billion, and then we also had an equity placement, a rather small equity placement, which was about 150 million. So put together, plus the earnings that are being booked now, the assets increased quite substantially this year. Net debt to equity ratio still very conservative at 36% as of the 9 months, and ROE is about 14%. Now, for our retail operations, for the first 9 months, their sales grew by 8.7%. As you know, our retail is comprised of the food and non-food businesses of SM. And their net income grew by 6.7% to 4.1 billion pesos. For the period, they added 25 new stores for a total of 193 stores nationwide. So far, they have 46 department stores, which increased by 5 stores, 37 supermarkets, which increased by 4, 76 Save Mores, with an increase of about 12 stores, and 34 hypermarkets, which increased by 4 stores. In the mall operation, for the first 9 months, their consolidated revenues increased by 15% to 22 billion pesos. And their net income increased by 15% to 7.4 billion pesos. They now have a total of 50 malls, both in the Philippines and China. So just in terms of statistics, in the Philippines, you can see that the base is really large already. Of course, we started, or SM Prime started in the Philippines back in, since 26 years ago or something like that. So in terms of GFA, they now have 5.5 million square meters. And in China, there's a buildup of space. And this is the new frontier for SM Prime, where they have 0.6 million square meters. They deal with about 14,000 tenants in the Philippines, and in China, about 1,500 tenants. And in terms of the foot traffic, you can see that, we're really serving millions here. In China, we're moving there, and it won't be long before millions will be patronizing SM in China as well. In terms of revenues, you can see that the growth has been very good, with increasing momentum for SM Prime, and there's an increasing contribution as well from China. In terms of margins, it's steady at about 33% overall. In terms of ROE, that has increased from 14% to 15%. This is the breakdown of their malls in the Philippines, and as you can see, 46% of their GFA is still within Metro Manila, although that's coming down. It used to be above 50% because of the build-up of malls in the regions, especially down in the Visayas and Mindanao, where they now have 4 in the Visayas and 4 in Mindanao. The expansion this year happened in General Santos, in Lanang, and in Cebu, Consolacion. That's the second mall in Cebu, second mall in Davao, and the first mall in General Santos. And the total GFA there is 429,000 square meters. This is a large size. Okay, if you compare 429,000 square meters, that's the same, almost the same size as SM North EDSA. So it's like they're building one big mall every year. But in terms of growth, of course, because the base is large, the growth is becoming smaller. But they continue to grow at at a fast pace. In China, they already have Xiamen, Jinjiang, Chengdu, and Suzhou. These are all doing very well. Of course, Suzhou is still, in the incubation stage. However, on the average in China, they have now an average occupancy of about 96%. And revenues increased by 27%, and net income after tax increased by 56%. So very strong numbers in China now. And we've discussed this before, but just to refresh your memory, the expansion program in China is basically 1 mall per year. They will be opening Chongqing this year, closer to December. And that will have 150,000 square meters. And then in 2014, there won't be any openings next year, but in 2014 there will be 2. One is in Chibo and the other is in Tianjin. However, Tianjin will have a GFA of something that's bigger than Mall of Asia. Mall of Asia is 405,000 square meters. Tianjin is 100,000 square meters more. And that will bring their number to 7 by 2014. For the banks, we can only discuss BDO at this point because China Bank hasn't released their results. So BDO, as you already know, they've reported their income, and it increased by 38% to 10.5 billion pesos. And of course, it continues to be the largest in terms of assets, loans, and deposits. So in terms of net interest income, because of the low interest rate environment and continuing declines on policy rates, net interest income continues to be very modest in terms of growth, even if gross customer loans increases by double digits now for BDO. However, they're making up for it through other income, which increased by 23% to 18.9 billion pesos. Net income increased by 38% to 10.5 billion. NPL is lower at 3.1%, coming from 3.9%, and ROE is relatively flat at 11.3%. For the property group, their 9 months revenues increased by 36%, and net income increased by 11% to 4.2 billion pesos. These are the legs of SM Land. You have residential, commercial, and leisure. For the listed entity, sorry, not yet, but this is the revenue or net income profile of SM Land, where majority of its income continues to come from residential development. Their net margin is currently at around 22%. And then for the listed residential arm, you have SM Development Corporation, which is the the biggest arm of SM Land. Their real estate revenues increased by 42.7%, and net income increased by 5.7 to 3.3 billion pesos. Their net income from real estate is up 3% to 3.1 billion pesos, for a net margin of 20%. In terms of projects, they have completed 4 projects, and they have 14 ongoing, and 3 are upcoming this year. So far, they've made available 48,892 units, and have sold 81% of that. Okay. They have a land bank of 137 hectares to date. For the commercial properties group, their revenues increased by 30%, and net income increased by 32% to 835 million. So this is also a growth area for SM, considering that we're increasing the capacity for BPO buildings, for locators. So we're now constructing 3 Ecom, and this is expected to be completed in 2014. Okay, so this is the portfolio of our commercial properties group, where they have cyber offices in Baguio, Makati, and in Quezon City. And then there's 1 and 2 Ecom already operating, and 3 Ecom under construction. So by the end of 2014, they would have around 299,000 square meters of GFA. For the hotels and conventions, they now have by 2013, they would have 1,019 hotel rooms. Obviously, this is a growth area still, and also under incubation still for SM. But this continues to be a strategic core business for SM because of the synergies that it will provide the group. And we have 24,000 square meters of leasable convention and exhibit space. In their portfolio are Taal Vista, Radisson Blu Hotel, and Pico Sands now operating, and soon they will be opening Park Inn Hotel in Davao, and SMX Convention Center for the conventions business. And Lanang is open already, no?
SMX.
Yeah.
Yes.
Yeah. Okay. So they already launched the SMX in Lanang.